You're listening to the Steady Trade Podcast, a podcast that inspires traders to make meaningful strides and pursue their passions. Your hosts are Tim Bohen, the lead trainer at StocksToTrade Pro, and Steven Johnson, the up-and-coming trader who's always willing to learn. Together, we'll sit down with experts to talk about their process, the lessons they've learned, and discuss how all traders can level up their trading careers. In today's episode, Tim will once again explore Steven's trading progress and discuss the difficult market conditions before diving into our listener mailbag. If you're new to the show, the listener mailbag segment allows listeners to submit any question to our lovely hosts. If you're struggling with something discussed on the show, curious about stocks to trade, or just have a general trading question, we'd love to hear from you. All you have to do is simply email admin@steadytrade.com and we'll try to answer your question on the next show. Once again, simply email admin@steadytrade.com and we'll try to answer that question. Tim and Steven, take it away.
Welcome to the Steady Trade Podcast with Jeevan Stonson and Tim Bohen. We did a listener mailbag today taking questions from you, the public. A lot of good stuff like, does Donald Trump's tweets affect the stock market? Has Tim Bohen made me a more disciplined trader? And loads of other fantastic shizzle. So listen in.
How's it going, Steven?
I was waiting.
It's getting cold here in Michigan.
It's getting
stocking cap weather
here in Dubai. Yeah, the market's really quiet, and I had 10 minutes to spare, so I just took a trade on ASURE, which I was just short on it. I just gave $100 away while I was waiting. How stupid.
And what was your trade plan in the standard fashion of the Steady Trade Podcast? Why did you trade this stock? And why did you pick this particular stock? What was the quote unquote setup?
I think you know the reason. I made 300 on a short this morning, and then I've just given 100 back out of PR boredom. But the short was the long setup was, sometimes when these stocks come back to VWAP and actually hold, they tend to squeeze a little bit in the afternoon. No real crazy plan. I thought, if it holds around VWAP, it might squeeze in the afternoon. It's had a lot of volume.
But the core of it was, and obviously I was clued in a little bit. We jumped into the recording. We were chit-chatting a little bit before, but I mean, it's the age-old mistake, and I'm guilty of it as well. I mean, you kind of let the cat out of the bag to me before we started recording. You were killing time waiting to start the podcast. You thought you'd get a little action. You thought you'd make a little money,
So I'd feel good. I thought I'd get that adrenaline hit and make some money, but just rip a quick 50, 60, 70 bucks, get myself up to 400 on the day. But just threw it. And you forget that $100 is money, right? $100 is like,
yeah.
Like you forget what $100 is. Like $100 is like all day drinking in a bar. No, but it is. It's all day drinking in a bar.
Yep.
And I just threw it away in 5 minutes out of boredom. So bad, man.
So we'll move on. We're gonna, as we mentioned in the introduction, we're gonna go over the listener mailbag. But listen, I want a lesson there. And I'm glad that Steven went this way, because this is it's a really important lesson, and especially. Again, I struggle with it. Everybody struggles with it. But the lesson is just don't trade for something to do. It almost never works out. And the problem is when it does work out, it's just teaching you bad habits, So say Steven did trade this random boredom trade while he waited 10 minutes to start the podcast. And let's say he made $100. All that does is teach bad habits. So then you repeat it. And so that's the biggest takeaway, I would say.
Nah, but honestly, I would honestly say, thank God I've been busy. But Vive, thank God I took 1,000 on Vive. I took 2,000 on Vive, but I paid the 800 commission, which I told you about.
Actually, that's a lesson. So let's recap that real quick. But I mean, there's a lesson there, because I think a lot of newer traders, they don't necessarily look at the fine print. And, so recap that trade where you made 12. I
want to know where Vive is right now. I bet you Vive's even lower.
Let me look it up. I bet you it is too. Well. Terrible stock. $3.53.
Dude, it's $7. That's 7% down today.
Yep.
Like, what am I doing? Looking for these stocks. Do you every day?
It's just a bottomless pit too.
Yeah.
I mean, at this point, you look at the daily chart, it looks like it wants to go all the way back to the pre-reverse split 7-cent level. And it looks like dries right now.
I mean, honestly, like, talk about holding a stock every day and making money. You can short this like pretty much every day. 7%. This was is it only at 8? I remember it being higher. It must have only been at 8. I thought it was at 12 or something. But
no, I don't think it was that high. Yeah, yep. So.
But I took $1,000 one day on it, and then I kept me borrow fees. I didn't deliberately hold it. I think I just fell asleep, and I thought, do you know what it is? 7 times borrow fees with the broker that I'm at, and Thiev's an expensive borrow because it's the worst of the worst, junkiest junk. And obviously the brokerage know this, so they're selling 1,000 shares for $800.
No, it was like $170 for the borrow, and then you held overnight, so you paid 7x the borrow fee. Yeah,
paid about overall with everything I paid $900. But I made 1,000 on it both days, so 2,000. But apart from
so 2 points.
I made 1,200. I made 1,200.
but I want to make 2 points. Number one,
I know them. Yeah, go on.
Well, you might now. Maybe you do, maybe you don't.
No, can I guess one of them? Can I guess one of them?
You got to write it down. Write it down.
Wait.
Because you can't guess, because then I can't. So write it down, and then I'm going to give my number one. That isn't what you're guessing. The biggest thing is know your fees, okay? Know how much you're paying. I mean, the nice thing is just this week we kind of fell into this commission free. We're headed towards, it's not on a lot of OTCs, it's not on options, but I think that's coming. But if you're going long NASDAQ stocks or NYSE stocks, you're basically paying 0 fees these days. But my point is, know your fees, because if you don't read the fine print, you might end up like Steven, and all of a sudden you paid $800 overnight in fees. Okay. Now, what was my second point?
All right, I've got it. I'm not going to show you it yet. I'll turn the page around after you've said it.
Okay. The second thing I want you to focus on is you can say, okay, this is the worst stock in the world. I'm going to hold it overnight. I know it's going to get crushed. You pay those $800 fees. What if the trade didn't work? Okay, so you're paying those. Okay, there. Thank you. All right.
Read that out loud.
What if I lose? I lose the borrows and the trade. Thank you. All right. Woo! 2 years in, we finally have started to gel. So, but yeah, so I'll let you, again, that's the biggest thing that concerns me to new traders. Because if you lose $800, you still pay those fees, okay? You're not paying those fees if you profit. So you lost $800 and $800, so you paid $1,600, which if you're trading on margin, that might be your entire account. So go ahead. Yeah. I actually didn't think you would get my point.
Oh, I know you. We've had too many hours together.
Ain't that the truth? Where do I go to get these hours of my life back?
I'm still sad I lost $100, but I feel a bit better after guessing that point too. But you've like, I was just talking to Papa John, by the way, and Papa John, he wrote a tweet and it got loads of likes on Twitter. He wrote, he said, readjust to the market, Stephen. I've taken 4 trades over the last month or over the last couple of weeks. I've took 4 trades, and 2 of them I shouldn't have took. So he should have took 2 trades the entire time.
Yeah, it's been so let me set that up and then we'll jump into the mailbag. It is currently October 8th, the day of recording, and man, it's been a 2 to 3 weeks. It has been lean. I mean, it's been just not much for volatility. And when we do get a play, it goes no. I mean, so I get so many people. They're like, well, the markets are down every day. Why not short a bunch of stuff? And I'm like, nothing goes up.
Nothing goes up to short down. No,
it's like in StocksToTrade Pro, I had a few people. They're like, well, shouldn't we flip flop to shorting right now? And I this morning I was like, give me a ticker. Give me a ticker that's up more than 5%, and we'll talk about shorting something. So
no, but honestly, there's nothing you can do. But generally, what will happen from what I've observed in the past is shorts are so desperate to jump on anything up 15%, and they're scared to miss it, so they'll short early. And one of these things will go, and shorts will get annihilated. You'll have a big runner, and the cycle starts again.
And that's what I'm waiting for. Yeah, you're right. Because that's a great point. I mean, that's one of the nice things about low float runners. It just takes one, and then it's like, and then they, and that's the great thing about these low float, runners. They don't have to be the same sectors. Half the times these things aren't even real companies. They're complete jokes, but you get 1 million float stock that goes 400%, and all of a sudden there's one a day for weeks,
Yeah, I know, but there'll be one big one. So for me, I'd never am a fan of buying, and I'm not a fan of buying pre-market even more so. But around this time when it's quiet, if I see some stock pop up with a lot of volume, it's a cleanish chart, it's a low float, it's holding the level of consolidation, I'll take the gamble on it being the next one with a tight stop.
Sure.
You know what I mean? Just in case. But yeah, let's get into some questions. The first one I believe is for you.
Yeah, I guess. Well, it looks like we kind of alternate. So I guess.
Shall I read it for you?
Yeah, I was going to say, why don't you? Since the first question is addressed to me, you can read it, and then I'll read the one to you.
I think the best idea for this would be for. What if I read the question to you, and then you read it to me? I knew
this was coming.
Did you know it was going?
I mean, has that technique ever worked? Have you ever actually gotten a laugh from that technique? You laugh hysterically at it. Every time you do it, you think it's the funniest thing in the world. But my question is, has anybody else ever laughed at that?
Honestly, it is so popular in the office that I work that other people do it to new people in the office. It's like a trend.
I'm glad you work at a daycare. I thought you were at an advertising agency. It's nice to hear you work with 6-year-olds.
Honestly, you need to do it to someone, please. Like the next time you're out or talking to your builder friends who build the projects of the wood and the sauna and the landscape. And
I built that.
Just the shed with the door, which looks like a boat or whatever it is. The next time you're talking to any of them guys, drop it, and just see what happens.
No.
Anyway,
I'll pass.
Hey, Tim, I saw your dead cat bounce pattern ad on Facebook. You are marketing the shizzle these days, by the way. What is a dead cat bounce? And I know that you're a dog lover. I don't know if you like cats. You're not bouncing a cat off the floor.
No.
What is it in trading terms?
Actually, if you've been following my Instagram, I may actually get an Instagram for my cat. That's how much I like it.
You have a cat?
Yes, I have several cats, actually. So
really? Oh,
yeah.
You're a cat person. Oh.
No. Well, I'm more of a dog person, but I have a daughter and a wife. So anyway, back to the patterns. So the dead cat bounce pattern it's really simple. And it's actually one of Steven's favorite patterns to short. Okay. I mean, this is a great pattern, especially in the quote unquote sketchy biotech land. Okay. So if you're on YouTube, I'll do the hand patterns. If you're not, I mean, I think you'll get the gist. It's just a long-term downtrending chart. I mean, this stock has been going down for months, years. I mean, again, bleeding, red every day. If it is green, it's a small green day and then multiple red days. And it's just upper left of the chart to bottom right. Then you get that dead cat bounce, which is that first day of any sign of life, any sign of unusual volume. Typically there is news. There's something behind it. So that's the bounce, okay? But it's a dead cat going into that. That's the downturn trending chart. Now, I almost always avoid this pattern, and I agree from the long side, and I agree with Stephen from the short side, because most of the time they spike up, they do, they'll sell shares into that, or even if they don't do a dilution, you've got 5 years of bag holders that are like, OMG, it's up 20%, get me out. So anytime I see that pattern, about the only time I will trade it is if it puts in that second day. Okay. So day one is the dead cat bounce, and that's either an avoid 99% of the time or it's a potential short. Only look at those stocks on day 2, day 3, day 4. I mean, if this is a trending stock and it's something to actually trade, it may put in 3 or 4 green days in a row.
Yeah, this is so much fun. Wait there. This is part 2 of the quiz. Wait there. I'm so excited.
Okay. So if I'll fill in, Stephen is making notes again. So, all right. So
you can't see this now. Okay, so the next question is how good of a pro student I am. I haven't been in a while. I've been working, but I know how you trade. I know I've learned it. And this is a test too. I know how you trade. So if the stock is a dead cat bounce, it's kind of a low float. It's you saying there you'll trade it on day 2, even though it's kind of junky. My question is, what is the best part of entry? And I've got some paper here.
On day 2?
Yeah. How would you trade it?
Then I'm going to look for that, and you probably know. Either you could call it either that weak open red to green or that dip.
Yes.
Fair enough. At least you listened to me. I thought for 2 years you never listened to a single damn thing I said.
No, and do you know why you're trading it red to green? I know, because it makes logical sense as a trader. You're trading it because everyone shorts the dead cat bounce.
Yep.
So
and deservedly so. The dead cat bounce is a high probability short setup. So,
but. And most of the time it works, right? Which is why most of the time you don't go long on day 1. But if you've got some shorts in from day 1 and it doesn't quite break down like it's expected, and then you get on day 2 and you've got some shorts on day 2 who see it open in red.
Yep. So they're adding. They're adding to the position because they're like, here we go. Yep.
But day 1s are adding, and then day 2, and then you've got the day 2 people who are on day 1. You've got the day 1 people on day 2, and you've got the yeah, that's too confusing. But anyway, you've got shorts from day 1 and you've got new shorts from day 2. They're adding, and that squeezes. All of a sudden, you've got loads of shorts upside down.
Yep. And when it goes green, so you're right. But then we've also add a third thing when it goes green, because now you got all the momentum guys like me that are looking to buy on
buying a day 2.
And so it's like think about it. Everybody's buying at that point. The day 1 shorts are buying, the day 2 shorts are buying, the Momo guys are buying, everybody's buying. Who's selling at that point? So
and you've got a very clear established risk level of green and red.
Yep.
Goes back red, maybe
low of the day or whatever.
Low of the day.
So
it's simply a color. Isn't it fun how we're learning? Isn't it fun how trading's not actually about the company? It's all about what other people are thinking in this big game of psychology.
Oh yeah, especially day trading. Hell, half the time. The listener, if you're a new listener, you might know, but in day trading, a lot of times you don't even know what the company name is. These are just tickers, So, all right, question 2.
Yes.
Steven. I've been following you since your first YouTube video. You seem like a different person today. Is Tim Bowen's discipline rubbing off on you, or what? Asks Gilbert from Miami.
I don't think Tim Bowen's discipline's rubbing off on me. But I see you. Obviously I've seen your process and your mentorship. But and it helps, and it comes from different angles. But I think I'm eating raw meat and with eggs on and training with Navy SEALs. Nah, I'm not quite there. I think it's hard to see how you're a different person. I definitely am. I just put a tweet out before while I was waiting for the podcast. And I actually said I'm 15%. Like I'm 15% of the reckless me 2 years ago or 3 years ago. I'm 15% of that person. So in that instance, that means I'm like, if I was a yogurt, I'd be like reckless light, or if I was a can of pop, I'd be diet light or reckless light. Do you know what I mean?
Yep.
Or if I was an Austin Powers movie, I'd be mini me light. Do you know what I mean? My recklessness is like, I'm reckless light. And I think it's from,
I was going to say the next question will be what has caused that. So
it's just saying the same situation over and over and over and over again. And I'm at the point where I'm like, I cannot lose to this situation after so much experience saying it. You just like, cause like, it's like, fool me once, joke's on me. Fool me once, joke's on you. No, fool me once, joke's on me. Fool me twice, joke's on you. But 100 times over. Do you know what I mean?
But you did say it backwards, but
but whatever. But like, no, but you get it though. It's like,
yeah, no, I get what you're getting at.
You can't, honestly, like, some people will learn after the 10th time of doing the same mistake. Some people will learn after the 1,000th, but you will learn.
Mm-hmm.
Eventually.
And that's why, and it's like, I hate to go into too many cliche sayings, but it's like, there is no shortcut in this business. If there is any business with zero shortcuts, it's trading, man. I mean, I don't know. Medical school, maybe you can like cheat off your buddy's test. Maybe your dad knows somebody to get you in an internship. There are no shortcuts in trading, and everybody learns those lessons different. And I've seen the maturity of Steven over the last 2 years, and as much as my favorite thing is to disagree with him, I think, it's just, he's seen it over and over again. He's put himself in this position, and he just says, I'm not going to do that anymore. And maybe you, dear listener, maybe you'll learn that in a week. I highly doubt it. Maybe you'll learn it in a month. Maybe you'll learn it in 6 months. I mean, maybe it'll take you 5 years. I don't know, but everyone goes through it. And if you've listened to all 120 episodes of the podcast, you've seen it right along with me. You've seen the maturity of Steven. So
yeah, no, but honestly, like, I mean, for example, the market's been super slow the last 3 weeks. So I went big on a position that I shouldn't have, like, last week, and I was upside down, and I ended up cutting it, and I lost 700. I'd be interested to see where that stock is now. But that's the only time I've been upside down in a stock more than a few hundred in like 6 months, 7 months.
And that's, back to that same kind of, I'm kind of making the same point, but
I don't know.
So many people will be like, they'll ask me, they'll be like, how do I cut my losses earlier? And I'm like, listen, I can give you all these rules. Okay. They'll ask, should I at a certain percent or, at a certain support resistance level, but at some point, you just have to get sick of taking those big losses, not sticking to your plan. I mean, I always say, one of my favorite sayings is, I mean, depending on your account size, nobody says, I'm going to risk 75% of my account on this trade. No one says that. But people do it all the time. People risk 100% of their account. No one goes into a trade saying, well, my stop loss is 100% of my account. But people do it. And you just have to get sick of it, where you're like, I am not going to let this loss get bigger. So
yeah, and you just learn stuff as well, and that's so true. But it's also like, if you're like, generally, if I'm down in a position, like, you obviously start down on every trade, because
sure,
if you're buying on the bid and it's a short or whatever, but or if you're shorting on the bid, I'll buying on the ask. But if I'm down in a position more than 15 minutes, 20, 30, if I'm red on a position and I stay red 20 minutes, generally 9 times out of 10, it's not going to work.
Yep.
If it works, it's going to work straight away. Do you know what I mean?
Yep.
Oh, it's going to work within 20 minutes. But, yeah. So, yeah, the answer is you will always get more and more and more and more disciplined, and it's not like every situation's unique and different in trading. There's not like a special stop loss or a cutting point for every single trade. Like, you don't cut every 1 or 2%. You see the same situation over and over and over and over. and you think, nah, that this situation is happening again, or that situation is happening again, or this one worked out last time, so let us just keep it in for a bit longer. It's just being in the game.
Yep.
Being in the game.
That's it. It's just like, yeah. So, but yes, Gilbert, I have seen a maturity as well. It makes me proud. I realize I'm a jaded old man, but I love to see success. I love to see growth, and Steven makes me proud. I've loved to see his evolution over the last few years.
I'm green. I'm green over the last half a year now. It's been good.
Beautiful.
Not by a lot, but and the trade with a tiny account, it forces discipline.
Yep.
But yeah, I've got a question from Matt from Toronto. Hey. Hey guys.
Your Canadian accent is almost as bad as your British accent.
I keep hearing.
We've talked about my theory that all you British people are just faking that accent, right? We've talked about that.
Did not know about that. No, you think English people are faking accents? I think California people sound...
Because we kicked your ass back in 1776. You tried to sound more, cultured. So you made up this accent after the Revolutionary War, or the War of Independence, in order to sound superior to America, even though we sent you packing. So
groovy, baby.
So you're just a pawn. I mean, I don't blame you. Your parents talk that way, but I think this accent is just completely fabricated.
I'm just a fat nobody.
No, I didn't say that.
That's how I feel. I had McDonald's last night. Ugh. Anyway, no, I don't know. Yeah, I mean, I don't know if that's true or if it's not true.
How come when you sing, you don't have an accent?
How come when I sing, I don't have an accent?
When anybody with a British accent sings, they don't have an accent.
That depends where you're from. I know some rock singers who are from Newcastle, and it really comes across. Maximal Park are a band. I don't know, man. I don't know the answer to this. I'm not that smart. I'm not very clever. I don't know how I'm in advertising and when I'm going to get figured out, but I will get figured out. I don't even know how I can trade successfully. I don't know how I learned it. I don't know how.
With the next question. I didn't mean to take you down a rabbit hole.
But you can also, if you're not very clever, you can get trading. Like, if you're not that clever, you can get it. You've just got to be a bit of a gambling addict and obsessed with turning up every day. But anyway, that's my take. Matt says, this is dead interesting. I keep talking about commission-free trading. Is that a new trend? How will it impact me as a trader? This is the last sheet of paper. You answer, and I'm going to summarize your answer in one word.
Perfect. So I think it is a good thing, especially if you're trading with a small account and you're learning. I mean, commissions can really add up. I mean, if you've got a $1,000 account and you're paying $100 a month in commissions or $200, I mean, that adds up. That's real money. Now, I think I can't read that. I'm not sure what that says, but badly?
Yeah. Go on. You say it affects people terribly. And go on, you explain yours, I'll explain mine.
Oh, okay. So what I like about it is back to the fact that, the markets have been pretty quiet the last 2 or 3 weeks. What I love about this commission-free trading is I think it's going to bring more, I mean, I hate to be mean, but more dumb money to the markets. And, I mean, trading isn't a zero-sum game, but, because it's not 2 market participants. It has to be, for me to beat Steven at poker, there can only be 2 of us. But that's a zero-sum. But in trading, I mean, someone has to lose for someone to make money, okay? Someone has to sell at a loss or buy at a loss or whatever. And I think you, dear listener, you're listening to this podcast, you're researching, hopefully you're reading all the books we recommend, you're watching all the courses we recommend, you're doing your due diligence or writing your trade plan. You should be excited too, because it's more dumb money coming to the markets. And, hey, somebody's got to be the gazelle and somebody's got to be the lion. So.
What a metaphor. Yeah, I agree that it's more dumb money coming into the markets. That's very true. From a more experienced trader's point of view, it's a great thing to have trading-free commissions. I think as a learning new trader, like in terms of our audience of who's listening, I think it's one of the worst things that can possibly happen for a new trader. I think it's gonna destroy discipline. It's gonna encourage bad habits.
You think so? You think just because they're saving $5, they're gonna trade more?
Absolutely.
Really?
Absolutely.
Okay. All right. Yeah. But what about the PDT? I mean,
PDT. I mean,
if you got a small account, you can't. So
yeah, but there's a lot of brokers that don't enforce PDT but do have $5-6 commissions, and I would
those guys are never going to go free,
Yeah, maybe if they don't go free, but like when I had a $700, $800, $900 account and I had to pay $12 to get in and out of a trade, and I knew that the trade would at best make us 20 to 30. It was just 30% as a 30% cost. So there's a lot of trades that I didn't take, which I would have probably lost on anyway. There's a lot of trades I didn't take because of the commission fees. Commission fees make you think, if I make a trade today, and obviously you say you take 100 trades in a month, that's your whole account if you've only got $1,000 account.
Sure.
So you need to think, I need to not take 100 trades, I need to take maybe 4 trades a week. So I need to that's 1 trade a day. So then I need to really pick the right trades. And
I guess I see your point. I mean, I guess I keep thinking from it, again, I'm in the U.S. I recommend all new traders not use these brokers that allow you to, a law is a law, a rule is a rule, and some of these brokers are kind of playing some games. So when I was answering the question, I was thinking of Joe Sixpack in Iowa with $1,000 account that's under the PDT. He can only trade 3 times in a rolling 5-day period. So I guess that was the way I was looking at it. But I also I see your point as well. So
yeah, no, but I mean, and I also on that point, I think the PDT is the best thing on earth because it teaches you to look for a specific setup. It teaches you to think, look for those late day VWAP polls that come overnight. It teaches you to focus on a setup.
The biggest thing, and I agree with that, the biggest thing I hate about it is when they won't let you out of a trade, like if you violate it,
stupid.
Is that, I mean, they should, to me, and if you're listening and you're curious, we've done plenty of episodes on the PDT. The biggest thing I hate is when people are making bad decisions to stay in something because they're either stuck, broker won't let them out, or they don't want to use that last day trade, because
no, that's ridiculous. Ridiculous.
It seems like there's a better, I agree with you. Like many things with government and regulation, one of my favorite sayings is the Ronald Reagan quote, the 7 most dangerous words are I'm from the government and I'm here to help. So many things are unintended consequences. I think the spirit of the PDT is wise. I just don't know if it's the right implementation is all. So,
no, and I fully agree. But you should be able to just ring up the broker and be like, look, I believe really unlock is. And then if you do it 10 times, then you get blocked, but you don't do it 10 times.
Exactly. Yep. So
I think you've got the last question, have you?
All right. I read an article last week from Barron's that said Trump's tweets impact the stock market, but not for long. Have you guys seen this as a catalyst in your trading? How can I turn this to my advantage in my trading? And we will link the article below if you want to check it out. So, Stephen, I know you're a huge Trump fan. I mean, I go to your Instagram. It's non-stop Donald Trump memes. I'm getting to the point where I've seen a little too much of it. I mean, you could tone down your fanboyism a little bit, maybe. So what do you think?
I'm with Kanye. It reminds us of Kanye West, and then it also reminds us of a funny tweet.
Well, at least you're both certified insane. I mean, you and Kanye have that in common, at least.
But I'll tell you a funny story. Kanye West, which I'm going from Trump to Kanye to Twitter again. But Kanye said once on McDonald's, he wrote a tweet saying, "I love Burger King," or "I love McDonald's." He wrote a tweet saying, "I love McDonald's." And Burger King replied saying, "Explains a lot." and it went viral across the internet. I mean, how good's that for being on the ball and quick as a brand to another brand?
Yep.
But anyway, yeah, I mean, I don't know about Trump so much. Obviously, any news and from the American government will absolutely affect the stock market, but I saw more what really affected the stock market. Not a lot, but when England done some twists on this, when England announced that it was going to leave Brexit.
75 years ago.
75 years ago and was still not out. On that date, I remember Forex took a big turn, and I think even the stock market had a bit of a red day. I can't remember. I'd have to go right back. But even English news can affect the American market. Global news can affect the American market. Depends what it is, but you'll be able to answer better, I think.
Yeah, so the Trump tweet effect is real. It exists. It is kind of slowed down a little bit, but the simple fact is that people are watching his tweets and people are trading on them. And I don't know, philosophically, is that a good thing or a bad thing? I don't know. Should the president be tweeting about corporations, and things they should or shouldn't be doing? That is that his place? I don't know. But ultimately, the root of your question, I have an answer for. Yes, tweets move market, whether it be Trump, whether it be big name traders, whether it be, news corporations. At the end of the day, I don't think there's any sort of tradable edge there. Okay. Why? One of the biggest reasons is you've got supercomputer algos that are sitting there trading instantly based off the content. This is real. These algos are reading tweets, they're reading headlines, and they're trading thousands, millions of shares off of that. So you can't be there first. You're not going to beat the algos. You're not going to beat the supercomputers. You're not going to beat the Harvard interns that are just sitting there refreshing Trump's tweets all day long. It is an interesting effect. I'm not sure how I feel about it. I don't think I particularly like it. I'm a free markets guy. I don't think the politician of any country should be commenting on, public markets. The public markets should decide. That's the beauty of capitalism. I'm sure my fan, my Ayn Rand, my idol, I'm sure she would not be particularly happy with the president commenting on free markets. But however you feel about it, I don't think there's any tradable edge because you're never going to beat the supercomputers. You're never going to beat the Harvard interns. One of the biggest reason Stephen and I and 90% of the guests on this podcast trade the gutter stocks is we don't want to compete against the hedge funds. We don't want to compete against the Harvard MBAs and the supercomputers and the algos. So if you find an edge, let me know. I don't think there is one there. So
yeah, but it's also that we don't really want to be affected by
random stuff.
So many external factors. The only thing that's going to affect a crappy little stock is if the actual stock has news. But that's one variable. There's no real other variables. But these big companies have thousands of variables. I need to read Ayn Rand. I've got the audiobook. I need to do it. Maybe I'll do it after I've had McDonald's. Do you wanna wrap this up, Tim? It's been
yes. So, thank you again, everyone. We love these questions. I'm pretty sure. I mean, we've had the steady trade drinking game many times of my repetitive phrases, but I mean it, and I really, really do mean it. These are some of my favorite episodes because, we're 120 episodes in. I've done 1,700 webinars in StocksToTrade Pro now. Sometimes it's hard for me to know what you want to hear about. So please go to SteadyTrade.com. We've got the inbox there. You can record audio or you can just send a text. Comment on YouTube if you're on YouTube. I love these episodes just because we as a team want to bring value to you, and I think this is one of the best ways.
Yeah, no, and also it's fun to know that there's people out there beyond the screen.
You're right. It's funny. You get it's one thing to talk about if Stephen and I come up with a topic and talk about it, but it's like, you're right. We're connecting with someone on the other side of this webcam. Yeah.
Like there's actually real people who listen to this, and lots of them as well. And it's crazy.
It is. I agree. So
I get scared when I think about it. I think because you just forget it's me and you, right? But it's not. There's tons of people, friends, family.
That's why I constantly say we live in the greatest time in history, man. This is a unique time. Yes, instead of thinking that the world's going to end tomorrow or in 12 years, read some Steven Pinker, okay? This is the greatest time, the safest time. It's an incredible time in history, and you can listen to a guy from Michigan and a guy from Dubai talk about their trading journeys. I mean, this did not exist when I was trying to learn trading. YouTube didn't even exist when I was trying to learn. So
yeah, and for a fun prize, if you can guess on the very first episode that we tried to record together, if you can guess how I was dressed, you win a special prize.
I like it. So.
That was funny.
All right. Well, thanks again, everyone, and we'll see you on the next episode of the Steady Trade Podcast.
That concludes this week's episode of the Steady Trade Podcast. I hope you enjoyed the show and learned something from our listener mailbag. As I mentioned earlier, if you have any question, just shoot us an email at admin@steadytrade.com and we'll add you to the listener mailbag for our next show. For more information, please check us out at steadytrade.com, and I look forward to seeing you next week.